Every trade I take begins with one question. How much should I risk based on what I see on the chart? In trading, it's rarely about the cards you're dealt, but how you play them. What separates professionals from gamblers is how they manage risk. Legendary speculator Peter Brandt doesn't use conviction. He claims that his degree of certainty with a trade is inversely correlated to what actually happens. Instead, Brandt uses what he calls a trade risk matrix. For the ideal setup, a pattern of at least 12 weeks with clear horizontal boundaries and a decisive breakout, we start with a benchmark of 80 basis points, or 0.8% of the portfolio. Before entry, that risk is adjusted up or down according to pattern quality and contextual clarity. If the pattern is diagonal instead of horizontal, the risk is capped at 40 basis points. These details make the pattern more subjective, and subjectivity has no place in full-size risk. When boundary lines can be drawn several ways, we subtract another 20. Ambiguity is expensive. Only clarity deserves capital. Remember, you're allowed to wait on your perfect pitch. Sometimes we take an anticipatory unit, a small probe before the real breakout, never more than 30 basis points. It's information gathering, not heroism. There are occasions in which one should risk more than 100 BP, but only when a very clear long-term pattern, say 16 weeks, is launched by a tight, well-defined pattern nested inside it. This creates a launching pattern setup, an asymmetrical opportunity discussed in recent ChartWizards reports. Keep watching until the end to learn how to sign up. Back to the risk matrix. Factor trading also enforces composite risk control for correlated markets. As a rule, composite risk on highly correlated trades should be limited to 200 BP. This means that because some trades should be expected to move together, like gold and silver or S&P and NASDAQ, we limit total exposure. Survival comes before return. Risk is my only constant. We dial risk up or down based on volatility, chart quality, performance, and composite correlated exposure. Every trade matters only if it's properly assessed and controlled. Using a risk matrix to define how much to risk per trade adds clarity and discipline. For more analysis, trading techniques, and educational content, sign up for ChartWizards at peterlbrandt.com. You won't find this level of tactical detail at this price anywhere else. Join us today.